Hi everyone, I am Murali. I thank you for spending some of your time to visit my channel. Let's begin with the video. In the last video, we understood that the FedNow service is offering an infrastructure to the banks using which the banks offers the instant payment option to its customers or end users. In case if you have not watched the previous video yet, I suggest you to do so. The link is in the description. In this video, we will talk about the various options that FedNow has that that is available for banks to choose from. There are five different offers and each caters a different functionality. So we will talk about one by one. The FedNow has five options for the banks to pick up. So the banks can opt for any of these five. Out of these five, the first three involves a customer, meaning the actual customer who transfer the funds. The last two is about for banks or any FIs, meaning any customers will not be involved in these options, but only the banks can choose to be a participant of FedNow for these any one of these options. So we will see one by one with an example. Okay, let's talk about this first option, credit transfer, send and receive. In this option, let's say that your bank has opted for this service. Then you can send instant payment to your friend and also you can receive the instant payment from your friends. Your bank does not limit any of this payment flow. For example, let's say this is a bank and you approach a bank for outward payment and your bank will send it. At the same time, one of your friend sends you the instant FedNow instant payments and your bank is enabled to receive it. So that will happen only if your bank chooses for this option. Let's move on to the second one, credit transfer send and receive with RFP. So this is also offering and sending an instant payment and also receiving it as well, but it has one additional feature, which is that let's say that when your bank is opted for this option, credit transfer send and receive with RFP, which means your bank is not only offering you a push transaction, but it is offering you a pull transaction as well, which means you not only that you can send a request for sending the money out, but at the same time you can use the pull transaction, which is nothing but a request for payment, for requesting the money from your friends as well. So FedNow, so the FedNow offers this option for the banks to choose. Whichever the banks opted for this, they can have this RFP option as well. Let's move on to the third one, credit transfer receive only. So in this option, your bank has limited you from sending in money outside. It is not possible, you cannot send out. So what happens is that you can only receive the money from your friends or anyone else who is initiating the FedNow transfer to you, because your bank is opted only to receive it and it's not yet capable to send the money to the FedNow service. So that is why that's what the credit transfer receive means. So you cannot send the money outside, you can only receive it. Let's move on to the fourth option, liquidity management transfer. So liquidity management transfers only involves financial institutions like banks or credit unions. It does not involve any end customers. So how it works is like, let's say that it is your bank A and this is your friend's bank B. So when you send a request, it will go to the bank B and they will acknowledge it back. So the message transfer happens this way. But how the money transfer happens, meaning how the settlement happens. So when the B sends the acknowledgement back, the FedNow in between sends a request back to the Federal Reserve. So the money is already available here, and the Federal Reserve will make the debit entry of the bank A account here and credit back to the bank B's account. So that's how the money movement will happen. So what happens is that In order to make this FedNow transfer, here all the banks has to keep the liquidity all the time, which means they have to have an enough cash all the time. If it is not, then all the payments will be rejected. So that is why you can request any other banks just to push this liquidity amount on your behalf. So your banks can request the other bank, and the other bank can be a FedNow participant who chooses to only to be in liquidity management transfer for your bank. So they will ensure that your liquidity account or your central bank account will have the enough cash for you to make the FedNow transfers. And last option is settlement services. The settlement services also involved only between the financial institutions, not with the customers. So in our previous example, we saw that how the money will be moved from one bank to another. So likewise, here let's say that you have an account in a small bank. Let's yeah, it's a bank A, and but your small bank is does not want to be connected with the FedNow service. So they are tied up with, or they are using a correspondent bank, which is a big bank. Let's say that's a B. So your bank will send a request to the B bank, and B bank will send the request to the your beneficiary, your friend's bank C, and it will be your C bank will be responded back to the B, and B will confirm back to you. So this is how the flow will be. So here the settlement will happen using the B bank's account. We saw that, right? In Federal Reserve, B bank will hold the account, and that account will be debited, and eventually amount will be credited back to the C bank. So that's how the settlement will happen. So B bank does not initiate the FedNow request by themselves, but they will be providing the settlement services for any of the banks. It is not necessary that the bank has to be a smaller one, but due to some various business cases, some banks may opt for only to only to use the correspondent bank for uh, making the FedNow transfers. In such cases, some of the banks may opt only for settlement services option. In that case, the settlement happens using the correspondent bank's account, and this bank will receive all the notifications for all the debit credit entries happens throughout the day. So based on that, they will do the reconciliation. Also they will confirm back to the whatever the banks has initially sent the request, so that they can confirm back to their customers. Okay, now that we know about what the FedNow is and who can be participant and about the services, here comes the part where what value it provides to the banks, because no one would buy anything unless they see a value in it, right? So nowadays, all the banks wants to transfer money quickly. So the banks who offers this service possibly can have a more customers. So whoever is offering a FedNow service as a first mover, so they have an advantage of attracting more customers towards them. So their CASA account will be improving. So which means their savings account and credit checking accounts rates will be improving, which is really good for the banks. So that they can lend out more money. So that is one way. And second benefit is that the value added service, right? So whenever the customer is settled within the bank, or they can be an existing customer or a new customer, they can potentially sell the value added services to those customers because they already satisfied with your current process. Like it can be FedNow or any other services, but let's say in this case for FedNow, they are happy with a service whatever you provide, and they are happy with it. And that's when that you start to move, and you start to add another value added products to them. The next one is the cross selling products. When your customers experience the efficiency, ease, and transparency your instant payment provides, it makes them more willing to explore other products that you can offer. So there are two ways can happen. It is both for the second point and third point are interlinked. Either you approach them for making the payment, for selling your product, or they themselves are interested and they approach you for buying more product. So eventually this helps the banks to grow more. The seamless faster payments transfer always makes the customer happy, because the highest worry is that the money is stuck somewhere and they don't know what to do, right? So if the money is in the movement for 1 day or 2 day, so that's when the most, that's where the most that's when the people get anxious the most. So with the instant payment, it will be eradicated and the process will be smooth and easy. So i- your bank automatically tends to provide the better customer experiences. The third one is the cost savings, which is important. This is what all banks want, right? So this will be achieved by, let's say that since this is an instant payment, the chances of getting incorrect payments or chances of getting stuck or chances of getting uh, rejected due to technical issues are very very minimal. So in that way the banks does not have to put so much money into investigation of investigating those issues. So that will save a lot of money. And also from the customer point of view, nowadays if they want to use any check payment and all, they have to go to the banks and deposit the check and wait for 1 or 2 days to get it back, and they have to travel back and all those things. So this traveling charges, and customers can do this with at home itself, so that provides a lot of leniency and ease of services. So all these are the values that currently the FedNow provides to the customers. I hope these concepts are helpful to you and you learned something new today. This brings us to the end of the video, but this is not over yet. We will continue to learn about this payments system in upcoming videos. I once again thank you for watching my video, and I wish something good comes to your life today. Bye bye.